Good evening, everyone. This is James coming to you from Dividend Stock Talk. Today is Wednesday. Actually, no, it's actually still Tuesday because, I haven't really gone to bed yet, so I really can't consider this as Wednesday. It's midnight, Tuesday, Wednesday, 5th, 6th, whatever you want to call it. We're here at Dividend Stock Talk where we invest in dividend stocks for monthly and weekly cash flow. Now, the reason we invest in dividend stocks and dividend stocks only is because they're more stable. They have a tendency to pay the investors a portion of the profit. So if the company does well, I'm going to do well. If the company goes down, the stock price goes down, I'm still collecting a dividend, which is still cash flow. I like cash flow. It helps me pay my bills. Anyway, that being said, all right, let's jump on into stock market and see what's actually happening. Okay. Well, let's go back here to the monitor where we're monitoring all these companies. Wow, do I really want to look at these? Everything was down today. I bought down another $2,100 in this account. This is just a dividend investing account where we just buy stocks and we just collect the dividends on them, and we do the dividend capturing. But as you can see, each one of them is down from when we bought them. SKT, we bought this, there we go. We bought this one in April, and we still have it. Macy's, I think we got Macy's in February, did we? Oh, I don't know. Yes, we got Macy's in February. And as a matter of fact, we're coming up to another dividend payment next month for Macy's. Okay, Johnson & Johnson, whoops. Johnson & Johnson, I think we just recently got Johnson & Johnson 811, and DFS, we got that in April. Okay, we have enough money for one more position in this account here, so let's do that, and let's find something good to jump in on. But while we're doing that, let's see what's happening over here. Let's get out of that. Oh, that was Tiffany's. That's the one we were looking at last night, 91, 91 and a half. And as you can see, Tiffany's opened higher today. She opened at 92.99, which is almost at 93, and she hit a high of a 93.44, but then she pulled back to 92.25. But we were looking at this spread here, the 91.50 at 36 cents. So that is, what is it now? 91, 91 and a half. Ooh, look at that. It's actually, whoops, let's go back to that. 36, actually you could still get in on this one, 91, 91 and a half for tomorrow if you want. But that's totally up to you. But let's go and see who is on the list. Tiffany's and Love's is the only one. I call it Love's. It's actually Las Vegas Sands Corporation. They do the, what do you call it? Casino. So let's take a look at the casino and see what that's doing. Now, mostly everything had a down day today, from what I understand. All right, Las Vegas Sands. Starts out at 55, slow crawl up to 57, where she trades for about 2 months. Jumps on up to 62 for about a couple of weeks, drops back down to the 56 area, makes a low of the year for about a month in the 51 range. From there, she slowly crawls back up to the 57, 58, makes a high of the year at 66, draws back to the 62, 63 area, tried sideways, which where she is at the moment. Now, we had a couple of good days. I mean, this looks like, what's that, triple bottom, 1, 2, 3. Now she's going up. Yesterday, she tried to climb higher. She tried to open up at 63, but the market said nope. 62.33 is what we closed at yesterday. And then today, she opened up at 62.54, hit a high of 63.25. Ooh, that's nice. But then she closed back at 62.66. So if we're going to do this one, let's take a look and see what they're offering. LVS. Out of that, let's take a look at the seasonality, see what this thing normally does this time of year. because stocks have a tendency to move the same year after year after year once they start paying dividends, and it's, hey, business as usual. I mean, new companies with new products, yeah, I can understand the price fluctuations from time to time. But Apple, it's one of those companies that they introduce a new product at the beginning of the fourth quarter every year. End of third quarter, beginning of the fourth quarter, they always come up with a new product, and the price just jumps. But other stocks, like other companies, like Las Vegas Sands, I mean, they're a resort or a hotel or casino, resort. I mean, they don't have a seasonality over it. They don't have seasons like they don't introduce a new product. They don't hire a new CEO and everything changes. No, it's business as usual. So let's see what happens. Normally in January she starts out, jumps up at the end of the first quarter, beginning of the second quarter. It slowly drops down going into the summer months. A dead low right there towards the end of the third quarter, which is kind of like what we just left. Now we're jumping into the last 4 months of the year, and she looks like she's going to be going on the upside. This is where she is now, and as you can see, I plainly see that for the next couple of weeks is just going to go up, which I like that idea. So let's see what they are offering and see if there's any profitability there. So the 62.66 is what ended up. So we could look at the 62.50, which is right here. 33. Now that's going to be a nice return, but let's jump in one further. Okay, so 33. We're going to look at both of these, maybe all three of them. Okay, we'll look at all three to get an idea of what the risk-reward ratio is. Now, the software says that the stock is going to do something. Okay, seasonality says it's going to do something else. I mean, it's basically do the same thing. I mean, because LVS is always one of our favorites for doing the dividend capturing. Now, you got the dividend coming up in 10 days. Seasonality says we should be looking at an uptick for the next couple of weeks. Okay, that there alone is enough to make me say, hey, I want to go closer to the money to get a higher rate of return, which is at the just below at the money would be the 62.50. Okay, but you want to go a little bit deeper. See, this is going to give you the 33 is going to give you. Let's take a quick look. 170 over 350. That's about a 50% return. Now wait a minute. 170 is 340. That's just about 50% return right there for the next 3 days. I mean, how can you go wrong? 3 days, 50%. Great, All right, you don't want that one. Let's go a little deeper into the money. That's going to give you 25% return. You get $100 maximum profit. Maximum loss is $400. You break even is $61.90, which is quite the ways in the money. But that's a 25% return for 3 days, which is not bad if you think about it. Let's go one more and see what the next one up is going to give us. Okay, we're going to bargain up for a nickel, so let's see what that says. All right, 450, 466. It's only going to give us $50. So that's a little over 10%. Okay, so let's break it down for you. The 61 and a half is going to give you 10%. The 61 and a half, 62 is going to give you 25%. And the 62 and a half is going to give you 50%. So what you see with a higher rate of return for the 3 days, you get 3 days. You got Wednesday, Thursday, Friday. Okay? If the stock goes up, you're going to make money. If the stock goes down a little bit, you're going to make money. And if the stock stays the same, you're going to make money. So take your pick. Which one do you want? You want the 10%, the 25%, or the 50% return. Okay, now each one has its risk. Okay, the higher the risk, higher the reward. Okay, so that's that one. We got one filled order today? Oh yeah, that's right. We sold off Colgate Palmolive, the weekly Sep. That's right, because we wanted to get rid of that one. Let's quickly take a look at what Colgate's doing. Now, Colgate we've had since July. Okay, she dropped down to 71.11, and we got sold 71.5 at 44. So that means we brought in a nice little chunk of change. The stock did go down also, but hey, I mean, they don't have a dividend coming up for quite a while because we already collected the dividend last month. Now, let's see what the seasonality says for Colgate. All right. Colgate's going to go sideways for the next couple of days, and it's going to drop. And then next week, she's going to start moving up. Nice. So if we don't get called out at the 71.5, then we'll take the covered call again for next week, and hopefully we should see a better return then. Okay, so what else do we got? LVS, it's Sands. We're going to take a look at that. We took a look at Tiffany's already, BBY. We took a look at all those yesterday. So let's look at what was happening last week, because you still have another play or two on those. Okay, this week here. Harley Davidson we looked at. Let's see if they're offering anything this week. Okay, Harley Davidson got, for the next 2 or 3 weeks, you got a nice little upswing. Yeah, whoa, she's like a sinking ship. From a high of 62 back in April, she's down to 45, 46. Now, wow, there's a big drop. With a big drop yesterday, you can almost guarantee there's going to be an uptick tomorrow. So let's see what they're offering. Okay, 45.93, 45. Nice. That's one I would like to do right here. You got Harley Davidson, right? Today was a strong down day. Okay, almost across the board, everything went down. This thing is a slow decline, and she looks like she could be finding a bottom right here. Now, this little anomaly here is a huge drop for Harley Davidson. Now, if you can get in tomorrow and buy this at 34, that's a nice return you can make. Even if we moved up one, no, that ain't worth it. That's the only play right there, because you don't want to go right, you don't want to go in here, which is 45, 46, because the stock has to move up for you to even think about making money. But this one right here, uh, 160.5, that's 320, so let's say 45% maybe. That's a 45-cent play for 3 days. 45, 45 and a half. I like that play. That one looks nice. Okay, that's that one. What else we got here? Hewlett Packard. Now, do we want to chase 6 cents on a Hewlett Packard? Let's see what it looks like. HPE. Okay, that's a basic sideways. Look at that. Then you got the low here at 12. High here around the 14, 14 and a half. And right now she's at 14.04. What the heck? Oh, wonder why. Okay, so 14.04, she looks like you got a triple bottom here. She's going up. She's got the dividend coming up in 1 week. 1 week, not 2. You got 1 week for the dividend on Hewlett Packard. The seasonality for Hewlett Packard looks like this right here. Here's where she is now. Oh, we're going to pass on this one because I'm not looking forward to that dip in the next 2 or 3 days. However, next week, kind of tough one. You really have to find out. That's paying a dividend on Tuesday. So you have to be out of it by then. No, that looks a little too erratic for me. Whew. HPQ. See what that looks like. HPQ. Okay, seasonality for HPQ looks like a downswing. Nope, no thank you. Fox. Oh, okay. That don't make me happy. So it goes out for what, 1 or 2 days, then she drops down and goes back up again. I don't know. Way too much going on for that. APC. All right, APC. That's flat. I like flat. Flat looks good. Okay. Starts out the year at 57, sideways for a couple of weeks, jumps on up to the 62 area, trades for about 2 months, jumps on up to 70, goes about 2.5 months, comes back down to the 61, 62, drops down to 52, and she drops down to 42, down to the 41 area where she is now. Now that could be the bottom here. We don't know. As you can see, over the year, this is the low of the year, okay? So she could be bouncing off the low of the year, and who knows what we could be doing. All right, so let's take a look at what APC is offering. APC. $37, that's not bad, because you want to go to the one under, because the one closest to the money at the moment would be the 41.5, but then the stock has to move up in order to be profitable. So take it back just one. Take it back one. 41.5 would be right here, which is 30. All right, which is going to be about a little bit more than 50% return. But you drop it down just one, and that's going to be what, in the high 40s. All right, so you get 130 on the 380. It's 260. Not even close. Okay. Still about a 30% return. Okay, so you get a 30% return doing the 41.5, 40.5, 41. Okay. This is now, if this is the bottom, she should be heading up because you have here, you hit bottom here, 2 down days. 2 days at the bottom, and she goes up, down, 2 down days, goes up. She could continue going up a little bit more, but you never can tell what it's going to do, okay? Because the market maker is going to wake up in the morning and say, you know what? I think I'm going to have a good day. Let's pop this baby up a little bit. Or he could get some sour milk or sour gravy or something, and he make his stomach turn. He says, gets to work, says, you know what? I'm not feeling so good. Let's just drop this thing down a little bit. It's all up to the market maker first thing in the morning. See what he decides to do. So that being said, you got a couple of pointers out. Do we want to look at any more? Can we look at those? Okay, Garmin. All of these. You guys basically, you take care of these yourself. Come on, Vialab, let's take a look at that one. It's a 20-cent dividend. Put it in, VIAB. See what the chart looks like. She sunk again. This thing been trading sideways in the, what was that, 37, 33, 37 area for quite a while. She broke out for a couple of months up to the 42 area, but for the most part, she's been going sideways. But recently, she's dipped down. Now she's going sideways again, but she get 1, 2, 3, 4, 5 down days in a row. I'm saying this is the bottom. This is the low of the year. Am I looking for the bottom? No. If he finds the bottom and bounces off, yeah, I'll jump in, but not at the moment. Okay, Tech, no, Mark, Macy's, is that Macy's? Macy's is up again. Cool. So in 10 days, we'll be collecting some more dividends on Macy's. Wow. Okay, so now we got Macy's, I think, way back here. The 33 year. Now she's down to 21. Macy's starts out the year at 36, goes sideways for 2 months, hits a high of the year, 45, then drops from 45 all the way down to 30. That's a $15 drop, which is almost 25%. Is that right? No, from 45, that's more than 25%. Drops more than 25%. She trades in a range of 30 for a couple of months, drops back down, 22, trades for 3 months. Now she's at 21, and that's where she is. Let's see what season it looks like for Macy's. Okay, so here's where we are with Macy's. We're in a downtrend, so I'm going to say no to Macy's. Anyway, that being said, let's check and see if we have any questions. No questions. Outstanding. So this is James from Dividend Stock Talk. We talk about dividend stocks and investing for monthly and weekly cash flow. Now, we have 3 or 4 different, 4 or 5 different trading strategies we like to look at, all based around the dividend, because the dividend has a tendency to make stocks act predictably. Okay? If a stock acts predictably, the software that we created will tell us what the stock should be doing in the next couple of days based on what it has done in the last 10 years. So based on what it's done in the last 10 years, what we expect to do makes us a little bit of money. So we decide out of the 4 trading strategies which one we want to use to get what we want. Absolute worst case scenario, we hold on to the stock and we collect the dividends. Now, we feel like you've seen most stocks, they have a tendency to go up and down and fluctuate throughout the year. Every year, all do it all the time. They go up, they go down, they go up, they go down. So if you're buying before it goes up and selling it just before she comes down, the software will tell you exactly when and where to get in. So that being said, this is James for Dividend Stock Talk. We are out of here and we will catch you tomorrow, which is the 6th. All right, this is James. Have a great day and we'll catch you later.